A few weeks or a couple of months ago, Max Kaiser said something that really stuck with me. He said, how Bitcoin is always saying you get Bitcoin at the price you deserve. I think it's also
Uh-huh.
true that you get El Salvador at the price you deserve.
I
We
love
could
it.
all be going there right now and buying dirt cheap property, but we're all going to wait until the rest of the world is falling into literal shit and literal fireballs. And then we're going to move there when all the millionaires and billionaires have moved to El Salvador and are enjoying freedom on a Bitcoin standard. And we're going to
Beautiful.
talk about, yeah, we're going to be talking about how, I could have moved to El Salvador in 2024. I told my wife in 2024, but then I didn't. Just like the losers who keep telling you about the time they could have bought Bitcoin at $6 or whatever.
Yeah. Although to be fair, my wife was the one. She was trying to push me into Bitcoin early, like way back in 2011, 2012. She was like, "Why don't we just buy a whole ton of it if you love it so much?" And I was like, it fluctuates. I got to keep track of it. And so she never lets me forget that. That's
She
the reason
shouldn't.
I still work. Otherwise, I'd be just lazy, unimaginably lazy, sitting on some beach somewhere.
Yeah, yeah. Well, she should be reminding you of it. It is. I think you only start to get Bitcoin when you start understanding the regret. I see this with all my friends and family. The ones that still don't realize what a stupid mistake they've made by ignoring Bitcoin, they just don't get it. The moment they get it is the moment they start realizing what a mistake it
Yeah.
has been to ignore it so far. So it's good to keep whipping yourself with that because then it encourages you to stack harder. So I encourage
Well,
it.
and then there's this grieving process you have to go through, right? So, as you wake up early to take the subway into Manhattan to work at Morgan Stanley, and you're sitting there in the back of your mind, you know exactly how much you would have had if you had just bought some Bitcoin early. So, you have to, what is it? You negotiate, and, there's like the 5 stages of grief that I guess you got to go through. And then finally, once you come out the other end, you're like, all right, fine, I'm just going to buy it and jump on this train.
Yeah, it's a lot better if you deal with grief by buying rather than turning to Bitcoin derangement syndrome and hoping it'll go away and that will somehow vindicate you.
That's exactly it. But some will never learn, alas.
Yeah, it's been pretty amazing watching people keep digging their heels in. They just keep getting more and more stubborn, but you know what? It's their loss.
Yeah, well, guys like Nuriel, he's basically got a career out of poo-pooing Bitcoin. Who's the Lebanese guy? I can't remember his name. He wrote a book.
Talib, Nassim
Yeah,
Talib.
right. Yeah, and I mean, he completely lost his mind over it, and he got pushback. That was beautiful when he was on CNBC a couple weeks ago,
Yeah,
and Joe Crane was like, you've been you've been telling me this thing's gonna crash since whatever.
yeah, and it's very easy to say it's going to crash, and then just say, "Well, I don't know what's going to happen." So then
Yeah,
you're protecting yourself. No matter what happens, you're going to continue to say, "Well, it might crash one day." Of course, it might crash one day, but all kinds of things can crash. The dollar can crash. The treasuries can crash. Real estate can crash. I mean, New York City can crash tomorrow. Who knows? Maybe New York City becomes radioactive and nobody wants to live there. So there's always a risk. But the question is, the thing that I would tell all of these Bitcoin haters is there is a price at which Bitcoin becomes the biggest money in the world. At which point you can't possibly say it's failed. If it's the most successful form of money, if it's bigger than the dollar and the euro and all of these currencies, you've got to admit that it is useful for some people at that point. It's not just a speculative thing if it becomes bigger than all the other monies. So there has to be a price at which you have to admit that you're wrong. And if you don't have a price at which you would admit that you're wrong, then you're not serious. And on the flip side, I do have a price on the opposite end where I would admit that I would be wrong. I think if Bitcoin dropped to $6, $7, $8,000 tomorrow, I would say, yep, that thing is not what I thought it was. It's not. I don't think it would work. I think that price keeps going up, but there's always a number at which Bitcoin is. If it hits that number, then I think it's failed because I think if people bought Bitcoin over the last 5 years at 20, 30, 40, 50, 60, and 70,000, and then it crashes down to 8,000, then that really changes things. As long as it's above that kind of level, then you can sort of see why you see the case, because even though it keeps crashing to higher lows. But if you crash to lower lows, then all bets are off. But on the flip side, you have to have a number at which you start admitting that it works.
Well, it's tricky because you could argue that even if it went to $5, it's not necessarily dead for the following reason. So if you take gold, right? When gold was money, obviously it was fantastic. Just in 1,000 different ways, it was wonderful. But if you look at gold since it was effectively demonetized, right? Since 1970s, we have had multiple periods where gold has doubled or tripled over a couple of years. Then we've had periods where it's collapsed, where it's dropped by half or 2/3 in a couple of years. And so when you look at that, I mean, the sort of the first takeaway from that is that a lot of the criticisms of Bitcoin, talking about how volatile it is, for example, you could never base an actual economy on something that doubles or drops in half. Well, let's do gold, right? So in other words, a lot of that volatility is, of course, a relic of the fact that Bitcoin is not yet the main currency. And if it were to be tomorrow, if the aliens beamed down and forced us all to switch over to Bitcoin Standard, then it would probably behave a lot like gold, right? You would not have such violent changes in supply as we have in fiat and so on. And so when gold collapses by half or 2/3, nobody says gold, I was wrong, forget it. Gold's not a real money, right? What's happening there, of course, is that there are, supply and demand dynamics. Maybe governments are doing things. You had Britain selling off their gold supply, right? You've got sort of exogenous actors moving there, and they can move the price enough that even though we know that in the long run, gold is obviously, it's the most perfect money before Bitcoin existed for sure. But yet, of course, it can drop, threefold. So if we had a coordinated global attack, if the US and China and Switzerland and everybody else gets their ducks in a row and they all decide to go after Bitcoin, I think they could get it down to 7,000. Maybe they could get it to a lot lower if they work at it. But the thing is that they have got to hold it down nonstop, no defectors, no Argentina, no El Salvador, no country who says, hey, this is fantastic, I'm going to buy up all that. Right. So they would have to keep it down. And as soon as they let up, as soon as they get a break in their cartel, it would pop back up. Or it would likely pop back up, we have to say, as economists.
Yeah, I should say, I mean, if they just get it down for a day or two or a week, then maybe that doesn't quite undermine it. But if they keep it down there for a while, I think once you introduce this idea that you could go down to something like, let's say, a quarter of the 200-week moving average, so the 4-year average price. So you think of the 4-year average price at this point, I think is around 35, 38 or something like that. Last I checked, I think. I may be wrong, but it's in that range. It's in the 30s. So a quarter of that means that the average buyer over the last 4 years has lost something like 75%. So that's pretty significant blow against the case that this is a true store of value and a true form of money that people would want to hold in the long term. I think I would seriously consider the percentage of my portfolio that I would put in Bitcoin in this situation. And I would say the same thing on gold. I think the giant crash in gold in 1980, in the early 80s, was a devastating blow for gold. And gold has arguably never recovered from that, because in the 1970s, they went off the gold standard in 1971, the gold exchange standard, you should say. And gold went from like $40 to about $800 over 10 years, 9 years, which is an incredible thing to imagine. It was just a huge increase, and was to the believers clearly going to become the form of money. But it didn't. It crashed, and it spent the next 20 years going down until the bottom. I think it's around 2000, around $200 or $300, something like that. So it continued to drop for about a good 20 years, from 1980 until 2000, which really undermines the case for holding it as a form of money. And the reason it dropped, in my opinion, is because it never quite managed to take off as money. People could buy it. People started buying it as a kind of speculative thing, that I'm going to sell this later. But they didn't buy it as a cash balance for their business, because they couldn't have a bank built on gold. And that's why I disagree that gold was really such a great form of money. I mean, it was in theory, as long as you could get it to work, but in practice, governments just shut down gold banking, and therefore your gold was immobile. You could only use it for payments in person, and very few people are able to take it in person as payment because it's quite cumbersome to cut it to the right denomination and so on. And so there's no real market liquidity in people using it as a form of money, and that's why I think that bubble had to burst. At some point, you can't just keep holding something that you cannot use as money.
Yeah, I mean, I guess my fundamental frame, the frame that I come to Bitcoin and to gold with, is that fundamentally they're gambles on the probability that it becomes the most common money, right? And so if we say that there's something like 120 in fiat in existence, then if Bitcoin stands a 10% chance of becoming money, then its market cap should be 12 trillion. Simplifying massively. If gold, on the other hand, I think the market cap of gold is something like 10 trillion. And so there's implicitly something like 7% odds that it'll become the money. Now, there is, of course, side use of gold. It's used for jewelry and industrial uses and so on. But I did an exercise a couple of years ago where I compared it to other metals that also have jewelry demand and that also have industrial demand. So, for example, you can look at silver, and looking at this as an Austrian economist, where all value is subjective, across the spectrum, if you look at opinion polls, like do women prefer silver or do they prefer gold? Universally, silver is preferred to gold, and like by 2 to 1. All right, and this is not the buyer, right? This is the receiver. So if we take all of silver's value and we just say, okay, well, let's be generous to gold, and let's say that gold is just as good as silver as jewelry, so it gets, I don't know what, $40 an ounce. And then we go to industrial uses. We can compare that to other metals, tungsten and carbon fiber and other types of rare metals. And when you put those two together, right, there's like a certain amount of these metals in existence and a certain amount that's used and so on. So you can average those out. And the upshot is that something like 95 or 98% of gold's value is not the material uses. It's not the jewelry. There's relatively little central bank demand over the last 40 years. I think it's been plus or minus zero over that period. I think that the obvious conclusion for me anyway is that gold fundamentally is a bet that we will remonetize to gold at some point in the future. If we do, and if gold's market cap is 10 trillion today and it's going to go to 120 trillion in present terms, so whatever that is, quadrillions in the future, if that is gold's destiny, then that fundamentally is where it's deriving its value. It's like a stock where it's not making any money today, but it's going to make a massive payoff at some point in the future. And so for me, I look at Bitcoin the same way. And yes, it's absolutely speculation for me. It's a speculation that Bitcoin is going to become the most common money. What's the most likely path to that? Well, first fiat collapses. Depending when it collapses, people either go to gold because it's more familiar and it's got a longer history, or if we have enough Bitcoiners in the world, they go directly to Bitcoin. Either direction, over time, Bitcoin takes share away from gold. So if I go through those probabilities, then I think you get a very, very high speculative fundamental value for Bitcoin, which of course is many multiples what it is today.
Yeah, although I think in the case of gold, just looking at data from the World Gold Council, jewelry is a pretty significant demand for gold production. So just looking at the charts on gold.org for Q1 of 2024 demand, you see there's quite a, let me show you. So as you can see here, the total bar and coin is this green part, which seems like it's about a quarter, maybe. But the jewelry fabrication is even bigger. It's this blue part here.
Yep.
So the bar and coin and the central bank purchases, that's the monetary demand. And then the technology is this little green sliver. And then the jewelry is this big blue thing. So together, technology and jewelry are probably around a half of total gold demand. ETFs and barn coins and central bank purchases are probably about a half. So that would suggest that actually most of the demand for gold is not monetary; it is industrial. What do you think of that?
Yeah, most of the reveal, most of it is jewelry, right? How much did we get for? Wasn't tech a tiny
Yeah,
slip there, and then yeah. So right, so I think most of the demand is probably jewelry. If you put jewelry together with bars, and so that's the realized purchases are in the form of jewelry and bars.
I see.
But, right, and so but then if we step back and we ask what's the subjective value of it, well, if you buy a piece of gold jewelry, it really has two attractive features. One of them is that you can convert that into social value from whoever you give it to. Maybe they'll marry you. And then another value, of course, is that it holds its value, right? So there's lots of things that you can buy for them that do not hold their value. And in Western countries, that second, I think, is not so important. But in places like India, for example, gold is used as, sort of there's a lot more awareness of its ability to hold value. So the question is, how much of that jewelry demand, like if people are buying gold instead of silver, what percent, which, both will give you a certain amount of social return if you give it to somebody, how much extra demand is gold getting from the fact that it holds its value so well over time, in which case the buyer isn't necessarily aware why it's holding their value, but fundamentally it's holding its value, I would argue, because it is this long-term speculation that gold is going to be remonetized, it's going to be worth a lot more. Because if we simply, from a subjective perspective, if we simply ask how valuable is gold, if we look at jewelry demand, I would suspect that silver is much higher. Of course, it's cheaper, but that's why you would go to these kinds of opinion polls and ask, well, do people prefer, does the recipient actually prefer gold and silver? And, I come from a marketing background. And if you're sort of looking at this like as a strategic product, you would say, okay, the feature of an iPhone is XYZ. Well, in the case of gold, given that people seem to prefer it pretty close to silver, then you would import about roughly silver's value into the jewelry alone component of it. And then you would go through the other values. So on that basis, and I mean, this is very sort of sketching out roughly what it is. By my estimate, it's almost the entirety of gold's value is fundamentally a speculation to be remonetized that then passes through to an ability to hold value, which results in things like buying it as a gift. Indians investing their life savings of it, recycling it through electronics, and so all of these other things come from the fundamental fact that gold holds its value at a very high level. Why is it doing that? I think because it's fundamentally a speculation that it would be remonetized. If that's the case, then I think it's kind of fun when you have these debates between Bitcoiners and gold bugs, where they're imagining, if 98% of the value of gold is speculation on becoming money, we're talking about the same product here. Like, this is not, steel versus, like a brand name or something that has no physical form. They're pretty close to the exact same product. And then at that point, you would ask, okay, well, what is the likelihood, that gold versus Bitcoin would be remonetized? What is it in the near term when fiat collapses? Maybe that's 20 years, maybe it's 40 years. And then what is it in the long term, right? So down the road in 100 years when, let's say, Bitcoin has had a chance to compete with gold. And of course, gold has fundamental flaws, right? The very fact that it has a physical form, as you know, means that it must be concentrated. Therefore, it's very easy to control the supply and so on. Of course, it's hard to transact, to send over a distance, and et cetera.
Yeah, I'm still not entirely convinced of the way you frame it, because I don't think I like to think of the demand for gold and Bitcoin as being a bet on it monetizing, because I think it's just at a more basic level, it's just an expectation that you'll be able to sell this on in the future for a higher price, which doesn't necessarily require gold or Bitcoin becoming the global monetary standard. So you're just thinking in terms of, if I kept this thing for a year or two or three or five, whatever time frame, it's likely going to be better than holding on to cash or holding on to real estate or holding on to consumer goods or something of the sort. So in that sense, I I don't think the you could quantify all of the jewelry demand as being a store of value demand or monetary demand, because it's becoming, if you look at a lot of the gold jewelry, the value of the gold is becoming an increasingly insignificant part of the valuation. So, a $5,000 gold necklace will have $1,000 of gold or $500 of gold. You're paying for the designer and for the brand name and for the advertisement and for getting the celebrity actresses to wear it on an advertisement. So, a lot of the a lot of the demand for gold is effectively demand as industrial use, and so that includes all technology. When you put gold in a laptop, it's not being put there as a monetary speculation. You're not expecting to retrieve its value by selling it off when gold demonetizes. You're putting it there because it's being used and it's economical. So it's becoming more and more economical to use gold in industrial uses. And I think a lot of the jewelry use case itself is becoming more and more of an industrial use, in that it's just a material that looks pretty. And then you can add 5x premium on it with design and branding and other non gold parts of the equation. And so for me, the more of the demand for gold that is not monetary, and this is where I disagree with Peter Schiff and a lot of the gold bugs, they bring up the non-monetary demand as a win. They say, well, people will always want gold for semiconductors or for laptops or for industrial uses and for jewelry because it looks pretty. And for me, that detracts from its monetary use case. Ideally, you want all the gold sitting there looking pretty, doing nothing in bars and coins, ready to be used for final monetary settlement. Because in that case, that means you have a very giant stockpile of gold, and that means new production of gold is less and less significant compared to the giant stockpile. But if you start using that giant stockpile by putting it into things that are not monetary, things that can't be used to settle transactions, things that can be used as means of payment, meaning wires in laptops and fancy jewelry that's markedly overpriced compared to the content in gold, then you're taking out the stockpile, reducing the stockpile. And so therefore new production annually becomes a more significant percentage of the existing stockpile, and therefore that makes the money more inflationary, and therefore that makes it a crappier store of value.
I would argue it makes it a better store of value. I mean, it's still light years away from Bitcoin, but it becomes a deflationary mechanism, right? Where you've got a certain amount of gold that it's being mined, which is inflationary, and then it's effectively being demined, right? Either it's being buried again inside of a phone, or the example you gave of the fancy jewelry is interesting because at that point, the gold, in a sense, vanishes. It becomes an input into a completely different product now, which is a necklace designed by Banksy or whatever. And at that point, because that product is not valued qua gold, it's valued as something else which is higher. The gold effectively vanished. So I think those other types of demands are good for gold. They're deflationary. They drive up the price of gold. They effectively reverse the miners. Of course, you have feedback mechanisms. So if a lot of people are making fancy jewelry, then the price of gold goes up, and you have more mining and so on. So you have these supply responses, but fundamentally, the point you made earlier, right, that for a industrial designer deciding how to build the phone, or for an individual, deciding whether to sell their old necklace because they broke up with the guy, for those people, they're absolutely not thinking about any kind of monetary odds. What's the probability that fiat fails? They're just price takers, right? They walk into the market, they're naive. So like the stock market, right? Most people who invest in stocks, who buy the S&P in their 401ks, they have no idea how profits are going to turn out in 10 years. They probably don't even understand that that's the net present value of future profits. They have no idea. All they know is that it goes up, it goes down. People say it's going to go up. So, right, the vast majority of people are going to be price takers. They have no opinion whatsoever on gold. But just like with stocks, at the end of a long chain, you do have some people who are sitting there thinking about such things, and they're the ones fundamentally who with large errors, assign values to stocks. Stocks can become overpriced, they can be more underpriced. I think gold similarly. But for my model anyway, like if I ask why does gold have this massive premium over, say, silver, which is, from a sort of subjective use perspective, silver is far more useful than gold. It's used, I think, as a ratio of new silver mining. A much higher percent is used in electronics and industrial uses. It's empirically just as popular as a gift. And so, why is silver, whatever, $40 an ounce and gold is 2,500 an ounce? For me, anyway, I ascribe the vast majority of that to speculation on monetization of gold.
Yeah, I mean, the way I look at it is that it's just the stock to flow. So
Yep.
silver is, because a lot of it gets used in industry. Silver is a more extreme example of gold, as you said. So first of all, there's a lot more silver out there than there is gold. We produce a lot more; it's more abundant in the earth. But as a result of its abundance, it's constantly being produced in large quantities, and therefore it doesn't hold on to its value as good as gold does, because gold has a slower supply growth rate. So then when gold became the dominant money at the end of the 19th century, that just meant it's been a 150-year bear market in silver. It used to be 14 ounces of silver per ounce of gold, and now it's at around 100, and it's just constantly declining. And the reason for that is, I think, because of the growing industrial uses. So all of the more industrial uses happen to silver, that means that more of the silver stockpile gets taken out. So that means the monetary demand is now smaller as a fraction. And then when you get a 5% increase in production, which is roughly how much it usually used to happen with silver, if you get a 5% increase, as the stockpile declines, the supply growth rate increases. So you need more holders every year to come and hold the silver for it to hold on to its value, but that doesn't happen. So that's why, the more industrial uses, the less of a monetary role you have. That's why copper is worse money than silver, and that's why silver is worse money than gold. And if gold was the world's dominant form of money today, I would imagine it would be a lot less common in electronics and in industry.
Yep.
And I
Right.
think it would be mostly in coins and bars and really, really expensive jewelry.
Mm-hmm. Right. Yeah. I mean, if it were remonetized, it'd be something like $30,000 an ounce, and so anybody who's using it in an industrial application would have that much more incentive to take it out and replace it with something that's almost as good. So I agree 100% that it's stock to flow, but the question is why? Why is so much stockpiled? So that's what I'm getting at here, right? So, like, we do have other industrial metals that have extremely small flows, and I don't have the numbers right here, but anyway. But for those metals, you typically do not have a massive stockpile of tungsten or whatever, right? You don't have a gold type ratio. And so the question is, why is gold uniquely being stockpiled? And that's where, so initially, I think it had to do with the low rate of flow, but empirically, people discovered that gold held its value. That then, of course, led to its monetization. So that's what I'm getting at, is that, and we're seeing that in Bitcoin as well, where, I mean, in theory, people, you could have a stock to flow ratio in Bitcoin that could look, not in terms of new creation, but in terms of transactions, for example, it could look like Dogecoin, but it does not. I think the reason it does not in Bitcoin is because so many holders of Bitcoin are convinced that it stands a chance of being monetized as the main currency, and if it does, of course, it will go up a ton, right? Whereas Doge purchasers don't typically seem to believe that. And so I would argue that in gold, right, like, yes, it's got a massive stock to flow difference compared to other metals, but why? And there it brings us to, why are people holding on to gold so much more than other metals?
Yeah, well, my explanation for that is that the reason is the fact that gold doesn't ruin. You can't ruin gold. Gold is always gold, even if you were to strike a location that has gold with nuclear weapons. It'll be nasty for everything there, but the gold will boil, but then it'll cool down and it'll still
Yep.
be gold. So, because of that, we've been accumulating stockpiles of gold for thousands of years, whereas with everything else, they rust and they decay and they fall apart, or at least they tarnish in the case of silver. And so they require constant maintenance in order to keep them looking shiny and nice. And so, effectively, that's depleting the cost of it. So only with gold have we been accumulating a stockpile for thousands of years. And that's why, even as we keep getting more and more and more efficient at mining gold, we can't increase the stock to flow ratio or the supply growth rate in any meaningful sense, because or we can't decrease the stock to flow ratio or increase the supply growth rate in any meaningful sense, because you're still up against thousands and thousands of years of stockpiles piling up. What can decrease it, and I think what is demonetizing gold again, is if you start eating up the stockpile, you start burying the gold effectively in economic goods where the gold is not held there for the sake of the gold, whereas the majority of the value comes from the electronics and the software that's included, or the design that's in the jewelry. Then you're taking it out of the monetary stock, and then now you're making a higher and higher supply growth rate every year, because the production mechanisms are getting more and more advanced, whereas our stockpiles are shrinking. So that's, in my opinion, how silver got demonetized, and I think this is how gold is getting demonetized now.
And it's an interesting question because you have two dynamics there, right? So the indestructibility, strictly speaking, if it is destructible, that's deflationary, right? So, for example, people losing Bitcoin, boating accidents are wonderful for Bitcoin's price. It effectively reduces the number of Bitcoin in existence. And so if gold were destructible, then as sort of a first order consequence, the price should go up because gold is being demined because, whatever, people are dropping it in nuclear disasters. But of course, there's a second factor, which, you're noting, which is that the indestructibility makes it a better store of value, right? So again, right, it comes back to where a feature which is strictly speaking in not deflationary, so inflationary, the fact that it can't be destroyed, then contributes to this subjective value of it that ends in not necessarily monetization, but certainly, its store of value function takes over the value. And then, if we ask, well, a store of value, what's that going to be capitalized at? Like, what's the value of being a good store of value? It's not just $1, right? Like, if you hold $1 and it's completely indestructible, it's not like there's no additional value. I mean, there's got to be some benefit to that. And so, as a first approximation with gold, anyway, that's where I get to, okay, well then, what is sort of the end game of being a store of value? Well, it would be replacing, assets. And which assets would we be talking? We wouldn't be talking everything. I'm not a huge fan of the, 20 infinity over 21 million, because other things, you're going to want to live in a house and so on. But at least for currency demand, it seems to me that that's a reasonable proxy for what it is ultimately worth to be a good store of value.
Yeah, no, I think that's a reasonable approach to it.
Principles of Economics, my complete guide to understanding economics, is now available in hardcover, audiobook, and ebook from Saifedean.com, Amazon, and many more booksellers worldwide. And now I am also teaching a course based on this book on my website, Saifedean.com. Principles of Economics will run the whole academic year, from September to June, and will have a new lecture every 2 weeks, as well as weekly live online discussion seminars open to learners from all over the world and from all walks of life. Whether you're a student, a professional, or a retiree, you are making economic decisions every day, and this course will arm you with the wisdom of centuries of economists to improve your economic decision-making. You'll also get a free book of Principles of Economics if you sign up for the course. Go to Saifedean.com and sign up now.
Now, you recently made a video about how we could solve all of the US's problems by going back on a gold standard. So you said, let me let you walk us through it. So how do you fix the US? Let's say you get elected king of the US tomorrow. You have full power to do whatever you want with the Federal Reserve. How do you fix it with gold?
Yeah, so this comes from Murray Rothbard. He wrote an article, I want to say in the late 80s on this. And he said essentially, you just take the market price for gold today, so let's call it 2,500, and you say that anybody can come and trade $2,500 for an ounce of gold. But the trick here, where the magic is happening, is that the U.S. Treasury, it can't lose gold. If it loses gold, like if people come in and trade 2,500 for an ounce of gold, well, then Treasury has to go out and replace that ounce on the open market. Okay. It has to do that before it pays interest on the debt, before it pays Ukraine. It has to do that before it does anything. It has to go back and buy back the gold on the open market. What that does is that it gets you in a situation where if the US government is spending too much, if it is, or if the Fed is causing too much money to be created, mostly via the banking system, compared to the GDP, then inflation goes up. And at that point, gold goes to 2,600. People come and turn it in. They give 2,500 for an ounce of gold, and now Treasury has to go and replace that gold for 2,600. So it makes it so that the money printer loses money. It's a losing proposition for them. And so at that point, the smartest move for Treasury is to prevent inflation so that they're not forced to go out and lose money rebuying gold.
Well, but here the question is, how are they going to be able to maintain buying the gold back? Because at current valuation, at 2,500, there are a lot more dollars out there than there is gold at the U.S. Fort Knox, allegedly. So let's assume that I think it should be about 8,000 tons that the U.S. holds, something in that range, which I think is $300 billion, maybe $400 billion at this point. Prices are up, something like that. So about $400 billion of gold. So, but there are trillions upon trillions of dollars out there. God only knows how many. Depends on how you count and which sect of fiat jurisprudence you follow in your monetary statistics. But let's just take a random sample of these numbers and just say 20 trillion. So $20 trillion out there floating around, being held by people all over the world. Probably a conservative estimate, but just for simplicity, let's say $20 trillion. But $400 billion worth of gold in the treasury. So anybody can go and if a tiny fraction of the holders of gold, of the holders of dollars, try and redeem them for gold at the prevalent price, then the treasury would run out of all of its gold very quickly. Shouldn't they be repricing the gold significantly in order to prevent that kind of scenario? So if they said, all right, we're going on a gold standard, but we are setting the price of gold at, say, $20,000, $25,000 or something like that, then they might have a chance of keeping their reserves, because at that point, their ounces are close to the value of the outstanding dollars, right?
Yeah. So the trick here is that empirically, you don't have to have enough gold to back all of your tokens. You simply have to commit to maintaining the price. And this is empirical. This is observed across centuries. In fact, FDR used that argument specifically when he demonetized gold. He said, there's not enough gold in the world. Look, there's all these dollars and there's, a very tiny amount of gold. And it was similar back then, before FDR. It was something like 100 to 1. In other words, if you tried to redeem all dollars in existence, there was no way on earth there was enough gold. And of course, gold just would have soared in value. But the point is that you don't have, it's kind of like a telephone system, right? A phone system is built on the assumption that only X% of people are actually going to use it at any given moment. If everybody on Earth tries to make a phone call at once, it will completely collapse. This is why during natural disasters, you can never get through, right? So the assumption is something like 4% of people are simultaneously making phone calls. Now, in the case of currency, it's going to be even much lower than that, because remember, anybody today who wants to trade their dollars at 2,500 for gold can do it. Some of them are, but a very, very small number are. So if the Fed or if Treasury enters that market and say, we too are willing to sell it at the market rate, you're not going to get a massive number of takers. You may get nobody, just random noise. However, if they allow the price of gold to go up, in other words, if they allow the price of the dollar to decline substantially, then they will get a giant sucking sound. Few at first, then more and more and more. So at that point, yes, they're in trouble. And that's why you need that second part, which is that you require them to buy back at the first opportunity. So the next business day, they got to buy in more gold if it goes below the original level. So that's kind of the magic there. You don't need all of it. You're sort of treating the US dollar as if it's a token, right? It's no longer you're sort of accepting that there is no actual link to gold anymore. You're just saying, look, it's a token, and I'm going to maintain the price of the token at this. I'm going to be basically an algorithmic central bank, to use the terms used in shitcoins. You are recognizing the truth that the Fed is a shitcoin, the dollar is a shitcoin, and you're treating it as such. You've got this algorithm central bank, which is required to replace any stock that goes out. Therefore, it has an incentive to maintain the value at, let's say, $2,500.
Yeah, but I mean, I don't see how you'll be able to maintain that value. I think the example of shitcoins is instructive here because they don't manage to keep it up. And I think also the same happens with third world countries that are trying to manage something similar with their dollar reserves. Ultimately, it's always leveraging, building leverage on top of a fixed number of dollars. So you've got a certain number of dollars, but you add leverage on top of them. But it keeps falling apart unless, of course, in the case of the US and third world countries, what happens is you get an IMF loan. Every time the Ponzi seems like it's falling apart, people are dumping your currency because they want to hold US dollars. You get a bunch of dollars from the IMF, and then you use those dollars to satisfy the demand. Usually you revalue the currency downward a little bit, and then you start the Ponzi again. And then 5-6 years later, you're back at the IMF. So this is not really very encouraging as a precedent. So I think I can't see how the Treasury would pull it off because they would not have an IMF for the gold. There's no IMF for gold that can come and loan them gold. So in this situation, I mean, I guess if they still manage to maintain a monopoly on banking in a world in which you can't use gold for money, then they might be able to get away with it up to a point because then they can. Everybody needs to keep their money in dollars in the banking system because if you get gold, then you've just got a pet rock in your pocket, which you can't send anywhere. And so you could see how maybe that might work. But even then, I mean, this is why they went off the gold standard in the first place. Ultimately, you need to keep. But yeah, I guess they went off because they keep printing. So what you're saying is that if you just stop printing, if you stop increasing the money supply, then you can maintain it at where you are.
Right. And even for the franchise money printers in the banking system, they have a pretty good sense of what kind of interest rates and what kind of QT it would take to counteract bank money creation. So they're certainly capable of doing it. But to your point, when you're talking about third world countries in the IMF, for example, that starts getting us into moral hazard, into the crooked timber that is human nature. So it is theoretically absolutely possible to do this system, this Rothbard system. I don't claim any authorship. However, you're absolutely correct. They're going to be, in the case of third world countries, they have an incentive to just kind of let it rip, and then the IMF will bail in. It'll impose some kind of Washington, basically another 10% of colonialism in exchange for a bailout this time, and that works out for them because what is it? Roving bandits, not stationary bandits, right? But right, so for them, it's kind of logical that they keep screwing it up. The question is, in the U.S. government, what would the incentives be? And when you sort of zoom in and look at it on the ground, what would that look like, right? So if you wanted to try to hold money creation to money demand, so roughly GDP per capita plus population or something like that, if you try to hold it to that when a system has been running on easy money for this long, you would almost certainly have very severe recessions. You would have a lot of malinvestments wiped out. You'd have a lot of unemployment. Maybe it'd be 20%. You would have so much pain that realistically it would be reversed. And anybody who suggested it would be out of politics for life. So once you get into the human nature, unfortunately, I think the most likely conclusion is that we could only get to that system after some kind of catastrophe where people have, regular voters have already just completely given up on the system. If that's the case, then it's an open question, that could potentially be Bitcoin's moment, I think, depending on how many people are familiar, are comfortable with Bitcoin. But I think it's almost impossible without some kind of crisis that concentrates voters' minds, therefore concentrates politicians' minds.
Yeah, no, I gotta admit, I'd never heard Rothbard make this suggestion. I would have imagined that if he would have been asked to suggest something, he would have asked. He would have said that the only way you have to do it is to reprice gold. I don't have any recollection of any of his works mentioning that, or the one that you mentioned. Do you know which paper this was in? Do you have a?
I would have to find it. He has written that as well. He's got a paper where what I think he says eliminate all treasuries, and then he divides up all the assets to the U.S. government. So the military and the government land and all that. So right, he's got a separate paper where he's talking about from a justice perspective. Here the question is, what's the least disruptive way to do it? But yeah, I would have to find the paper.
Yeah, we'll post it in the show notes if you manage to get around to us. All right, so you've also been doing a whole bunch of videos, and you keep going viral on Twitter. You've got 3-4 minutes of biting commentary on what's going on in the world, and I enjoy your videos quite often. So I want to discuss some of the topics of them. Demographic collapse is one. What is going on there, and why are you still optimistic on this?
Yeah, it's so the number of children per woman is declining very quickly. It's even falling in poor countries, but it's far below replacement in a lot of countries you wouldn't expect. Places like Brazil or Argentina or Thailand, they're down like 1.8, 1.6, and you need something like 2.1 in order to maintain the population. So pretty much everyone in the world is either shrinking or they're going to be shrinking soon. And the question is, why is this happening? And my hypothesis is that it's a combination of two things. One of them is women going back to work, or women going to work in the first place, working outside the home. Of course, women always worked throughout history, but working outside the home. And number two is government pensions. And so I did a video where I looked at the case of Japan. And Japan is interesting because it was more or less developed around about maybe 1910s or 1920s. So it was round about Italy or France level. So it's basically developed. Yet people were still having 4 or 5 kids. And then in the post-war era, of course, you had a huge baby boom like many countries. And then starting in around, from memory, the 1960s or 70s, the birth rate in Japan just absolutely collapsed. And so I sort of looked for what is causing this. The left-wing arguments is that it's availability of childcare, and basically they want to push more sort of left-wing policy goals using this. But if you look at countries like Scandinavian, for example, they have done all those things, right? So childcare is free, healthcare is free. They give money to parents. They give money to anybody who doesn't earn a living. And in fact, the fertility rates for native-born Scandinavians is extremely low. It's like 1.1 or 1.3, depending on the country. So it's not that. And so what is it? So when I sort of go through the timeline in Japan, I think it is those two factors. So Japan introduced national pensions starting in 1960s, and then they made them obligatory, so everybody has to pay into them. And then the other factor was women returning to work. So at this point, the percent of young Japanese women who work is actually higher than it is for Japanese men, which is a pretty astonishing change, of course, compared to the pre-war era. And so the implication, of course, is that you need to make it easier. I mean, obviously, women can work if they want to, but you want to make it easy for parents to choose not to work so that they can sustain a family on one income. I don't know that I'm necessarily too optimistic in the near term. There is a silver lining to all of this, which is that if fiat collapse is coming, and if countries like Europe and Japan are running themselves into stagnation on the way to actual reverse, then empirically, when we look to the past, during golden ages, people tend to have fewer and fewer kids. And then when everything collapses, they they sort of have a baby boom and everything explodes again. Because think about what's happening in terms of that, right? So if the system collapses, then specifically pensions becomes a very important point, right? So if you are in a very, very poor country, if you're living in rural Uganda and there's no government and there's no real safety net, the only way that you're going to eat when you are elderly is that you're going to have a lot of kids, and you're going to have to keep having kids to make sure that one of them pays off. It's almost like buying a lottery ticket. Each one could work out. Sure, you got to feed them early on, but that's your only hope, is to have enough kids that they can support you in old age. Similarly, when you sort of devolve back to a poorer society, I mean, empirically, people have more kids. Probably what's happening is homework becomes important. Work at home becomes important. You have to process foods and petty farming and so on. And so the kids actually turn a profit, as opposed to a place like Japan or America, where they're basically all cost unless you are working on a farm. And by the way, that's sort of instructive. If you look at Amish, for example, right? So Amish are generally farmers. They do have many more kids than other Americans, and they also put them to work very young, which leads us to the other conclusion, which is that child labor needs to be completely reformed, especially for boys. I think it's actually very good for them to do work. I mean, compared to being trapped in a classroom, which is absolute torture for a boy, right? If he could go out like on a construction site and actually do things, that I think would be a lot more pleasant for him. We would have a much more skilled population, and he could turn a profit for his parents.
Yeah, I agree. I think there are a couple of uncomfortable ideas
All
here. Yeah, I mean, it's not very popular to say this, but I remember when I was doing my PhD at Columbia, we were looking into this, and I think it was my professor at that time, Jeffrey Sachs, whom I've hosted on this podcast before. So this is going to be extremely unpopular, but I'm going to hide behind the fact that it was said at Columbia and nobody got canceled for it, although that was 20 years ago. So but what the heck, we're still going to go ahead and say it. But I think he made the argument that the best predictor of fertility collapse is female education. Once women begin to read, then children become enormously expensive, because then the opportunity cost for pregnancy is very high. Because once a woman can read, then she can go out in the labor force and she could earn relatively good money. And so then pregnancy and childhood becomes expensive. And so then as soon as the education of women increases, then the fertility rate plummets. And he gave the example of Iran, because Iran, after the revolution, they had a massive drive for education. We're going to educate the poor. We're going to have universal education. And it led to a complete collapse in fertility. So I think there is something to that it is female education. But I think also the other thing is as you said, child labor. And I think this is a very obvious one. If you're as you said, if you're in a context in which children can work, then a child is an investment of 9 months of pregnancy and a few years of diaper changes and feeding, and then by the age of 5, 6, or 7, they pay for themselves, more or less. You make them work around the house, and they certainly do enough to justify the little food that you give them every day. So that makes kids a decent investment. And as you said, the third one is pensions. So maybe the three uncomfortable conclusions are that, with female participation in the labor force should go down. If you want higher fertility, you want fewer women to work, more children to work, and no welfare state. But good luck trying to sell that anywhere. That's a recipe for getting pelted with tomatoes and eggs on any kind of political platform. But it's economics. There's an opportunity cost for everything. You may not like it, but that's how it is. It's not easy to have a top career in anything if you need to take out a significant amount of time to take care for a child. So it comes at a significant cost.
Now, one of them that I think is happening, and no tomatoes involved, is that a lot of kids, because of the internet, a 14-year-old can build a business, right? They can sell used clothing on Facebook groups, or they can set up an Etsy, or they could They could set up a Twitter account where they put out memes. I mean, there's a whole range of economic activities that kids can do now simply because the internet hides what age you are. And fortunately, we still don't have laws against child entrepreneurs. There was this great book. I can't remember the name. It was from something like 1820. So it was some time ago. And it was this woman who traveled to China to become to work at a school over there, to proselytize Christianity. And she wrote a travel log. It's kind of fascinating, right? So there's a woman traveling in 1820. Might have been earlier. It might have been the late 1700s. At any rate, so she gets to Hong Kong, takes her months to get there. And she finds a captain who can sneak her into China because at the time, proselytizing was illegal. And so she found this captain, and he was this British guy, and he spoke Chinese. And so he waited until nighttime, and then he pretended to be just like a Chinese trader, like a junk. And he talked his way through, and they opened the chains. Okay, moral of the story is this kid he might have been 12. He was either 12 or 14. Okay. He had his own ship in Hong Kong, a British kid. I mean, just like when we try to comprehend what kids are capable if they're not raised in a day prison, greenhouse environment where they're not exposed to any kind of challenges, kids are incredible. They're extremely, they're creative. They are so brave. They have no fear of failure compared to adults. Adults are like, what if I look stupid? When you're like a 12-year-old and there's money to be made on Facebook, I don't care if I look stupid. Let me at them. So for that, I'm actually very optimistic. I think the child labor thing, we've got a chance of breaking through that. And the key there is just entrepreneurial kids.
Yeah, I think that's a good point. I think online is going to be the escape hatch. A lot of kids are taking their phones to school and doing useful stuff instead of sitting in class getting propagandized with all kinds of nonsense about which schools are filled with these days. I think it's true, and it's a lot of income can be had online. A lot of entrepreneurship can be had online. So I think that's going to hopefully help there. But again, a number of distractions that you have online is also unbelievable, and the ability of these kids to build the attention span that would be required to go to Hong Kong and set up a ship at 14 years of age, I think is a little bit difficult. Which brings me to another one of your videos where you were discussing the dumbing down of society and how people have been getting dumber. And I find this also quite interesting because you did an analysis of presidential inauguration speeches.
Flesh Kincaid scores. Yeah.
Yeah. Tell us more about it. So what did you do exactly?
Yeah. So I took every presidential inaugural speech. So this is the speech that they give when they win the election. And these speeches are generally aimed at trying to reunify the country, right? We're all going to join together. I will be the president for all Americans. This is standard in every country. But what's interesting is that they're always written by professional speechwriters. And so we can surmise that those professional speechwriters probably know what they're doing, and they are aiming at the median voter. So we can get a sort of reflected read on the sophistication of the average voter by looking at those speeches. And so what I did was ran every one of them going back. There's only 46, but I ran every one of them through a Flesh Kincaid grade calculator. Right, that's where you can take a piece of text and you can run it through this thing, and it'll count the complexity of sentences and how long words are and so on. And it'll tell you approximately what grade is this content intended for. And article writers use this. If you're concerned that your article is going to be hard to read, then you run it through and you make sure it's not too bad. Anyway, if you go back to 1900, the grade level of inaugural speeches is about 13th or 14th grade. So in other words, college level. So that was McKinley, Teddy Roosevelt, guys like that. Cross party. Didn't vary very much. If you then fast forward to today, so President Obama was 8th grade, Trump was 9th grade, and Joe Biden was 7th grade. So in other words, the people who are writing these speeches, who presumably know what they're doing, that is the top of your field, writing a presidential inauguration, they believe that the sophistication of the average voter is currently 7th grade. That's half of it. And then the other half is, wait, now if you go back, consider that 13th, 14th grade for a moment. Almost nobody had a formal education in 1900. They were largely educated at home. They might have been educated to the 8th grade. That was very common. But almost nobody went to high school. Nobody went to college. College was a toy for the 1%. Moreover, if you keep going backwards, so thankfully we have the inaugurations all the way back to 1789 with George Washington. So Andrew Jackson, he was 1828. And he's interesting because he was a populist. He was a man of the people. Donald Trump had a bust of Andrew Jackson in his office. He was actually very similar to Trump. The media hated him. The elite despised him. He did shut down the central bank, which is a big deal, a hero to all Americans. Anyway, he was 1828, so he was a man of the people. He was trying to be common. He was not trying to impress people. He was trying to communicate to the regular voter. His was written at 22nd grade. So it kicks off, I've got it here. He kicks off with undertaking the arduous duties that I have been appointed. All right, Washington, which is 1789, his was written at 26th grade. Now in 1789, nobody had a formal education in America. You went to church school or you learned how to read by reading the Bible at home. There were almost no government schools. There was a tiny little experiment in the totalitarian theocracy of Massachusetts, but there were almost no government schools. Almost nobody went to formal schools. And Washington was writing at 26th grade. His started off with, Among the vicissitudes incident to life. All right, and then we fast forward to today, when we spend $800 billion educating, almost everybody finishes high school, 12 years of education, which, by the way, costs $25,000 a year. So this is elite level education that we're giving the kids in Detroit and Baltimore. So, something like 2/3 of Americans have ever attended college, 1/3 have finished college. So with all that, Biden's opening this is America's day. And so the question is, what the heck happened? As we get more educated, we get stupider. And so at that point in the video, anyway, I go through sort of the history of American public schools, which were imported, as you know, from 1800s Prussia. Prussia had enough of peasant riots and revolts, and so they said it's time to fix the kids into pro-regime obedience. And so they did that. They had government schools. That system was then imported by progressives, by socialists into the US. They loved the idea. They weren't concerned about peasant revolts. What they were concerned about was American Catholics. So in the US in the 1800s, the big divide was between they weren't necessarily evangelical, between Protestants, Yankee Protestants, who wanted a large role for government. They thought that government could be this righteous sword, literally the kind of phrasing they used, a sword to purify society, to wipe out all the sinners, the people who don't recycle. And then on the other hand, you had the Catholics, and the Catholics generally had an attitude of leave me the heck alone, right? If I'm going to drink on Sunday, I'm going to have my beer at the beer garden and so on. Catholics wanted to be left alone. So the Protestants, who would be today's Democratic Party, they didn't like that. They figured that we can't force them, but we have their kids. And so they stuck the kids in government schools. And then if we fast forward now, apparently they made them all very stupid.
Yeah, it's pretty remarkable because it's a truly, truly astonishing decline. And I think we usually think of it in terms of, they used to speak English differently from the English that we speak right now. But it's not so much that it is different. It's just a much richer English. And I think you look forward for the next presidential inauguration. If it's going to be Kamala Harris, I'm sure we're going to go below 7th grade. I mean, it's going to be probably Orange Man Bad is going to be the opening sentence of that one. And I think it's really remarkable. And it is, you see it also, people's ability to speak and communicate, even though now we're in a world in which everybody is able to communicate and speak and write so much more often than they used to before, because you can tweet, you can post on Facebook, on Instagram, you can talk. And yet most people's vocabulary consists of saying like and and shit and F words. That's pretty much 40-50% of the words that most people use. It is. It's quite puzzling to think about it, because on the one hand, things get better materially, and you want to think people have more material resources. There's more capital, so then they're able to afford more food. So they should be getting better nourished. They should be getting healthier, and that should help their cognition. So they should be able to become smarter as well. Doesn't seem to be the case. And I think you probably make a compelling point that it is education, because it's startling, because at that time very few people went to formal education, and people just learned by reading on their own. And yet we get into the world of formal education, and it's just like with everything, trying to provide something in a blanket governmental manner to everybody just leads to it being massively destroyed by misallocation. Because when you're overruling the market's choices, you're overruling people's choices for where they want to allocate their resources, then you're driving blindfolded. You have no price signals. You're not able to perform economic calculation because you don't have markets in these goods. So there is no possibility for being able to calculate what the most productive uses of things are. And so as a result, yeah, kids spend 14 years now in kindergarten, pre-K kindergarten, and then 12 years of education. And I think, I mean, as you look closely, you just see just how much of that schooling is completely wasteful. Of course, you have, even in the, you have the current examples of the US and all the crazy woke nonsense that goes on in school. But even putting that aside, I think even going back 30 years ago, looking back to the wholesome days when they weren't trying to get us to chop off our genitalia in school, um, still back then it was a lot of useless stuff. It was a lot of trivia that I was never going to ever need again in my life. And the reason I think this survives is precisely because it's not a free market system. If it were a free market system, people would think about the opportunity cost of keeping kids in a cage for 12 years. You could teach them useful skills, and then they could go out and learn trade with the useful skills. And I think you'd probably have a lot less schooling, but probably a lot more education.
This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently.
Yeah, I completely agree. So I went to high school partly in Japan in the early 90s. And it's kind of an interesting comparison, I think, because the Japanese system, kids come out a lot better informed, of course, but you still have the calculation problem that you mentioned earlier, right? Where if education, even in a competent system, relatively competent system like Japan, even in that kind of a system, parents would not be teaching the kids the kind of garbage, because there was a lot of make work. There was a lot of, learning every single historical date of the Civil War era in the 1300s. And realistically, whereas on the other hand, they don't teach you how to do your taxes. They don't teach you, should you rent or buy? What's the net present value of stocks? Okay, like these are some practical things that might actually be useful in your life. So I think any kind of government-directed education is always going to have that kind of calculation problem where the people who are designing it, they don't know the kids. They don't necessarily, they're not internalizing the kids' own goals. And so they're not necessarily choosing the right topics and doing it the right way. But then I think what's happened in the US system on top of that is this sort of politicized indoctrination that I think has made it much worse. My own kids homeschool, of course. I encourage anybody to homeschool. It's actually very easy now because you can use the iPad. You even if you don't know math, you can basically outsource all this extremely cheap. It's very easy. But at any rate, when even if I compare that kind of high quality but still, miscalculated, I think it's fallen even further to this point. And a lot of people saw that during COVID. I think that was eye opening for a lot of parents where all this stuff, like they sat in on a class, they said, holy crap, what is this? Not only is it teaching the wrong thing, it's, they have something called spiraling, for example, where every year you essentially spend the first third of the year reviewing what you did before, and then you spend another third of the year sort of foreshadowing what you're going to do next. I mean, it's astounding. It's almost like they are intentionally trying to take out all of the curriculum, which they may well be doing because, of course, it's union run, and it's probably easier for a teacher to talk politics or to just keep teaching the same thing. Literally, you're teaching the same thing to the same kids 3 times, right? So it is almost like they're just trying to look busy to make it as easy as possible. And the question is, what's the end game on that? Like, how dumb can you get? You could make sort of an accelerationist argument that it's just as well, because government schools are always going to indoctrinate anyway. Even Japanese schools, they do encourage people to be to listen to their rulers. Japanese, sadly, for example, almost universally got vaxxed a couple of years ago because they have an unhealthy respect for authority. So they're always going to indoctrinate. So in a sense, you actually want them to just go completely off the deep end. You feel bad for the kids who end up cutting off their genitals, but having said, in terms of a system, you almost want it to get worse.
Yeah, it is pretty depressing, and I think it's very true. I think looking at what kids today learn in school, I mean, I'm being just a grumpy old grouch here, but I really think things were more serious back in our day. I just think that there was more focus on education, and now there is a lot of wanking in the sense of no, we're not just going to teach you to memorize your multiplication table. We're going to go through all of these very elaborate games meant to engage the student and to draw their attention. And really, at the end of the day, you're just getting in the way of them learning their multiplication tables. Just learn the multiplication table. It's just simple. And yes, it's going to require some hard work. You're going to sit down, you're going to repeat them, you're going to think about them, but then eventually you'll learn your multiplication table, and then life will be a lot better. And I think a lot of it is just high time preference, modern laziness, where people are just always looking for a shortcut, always looking for a hack, always looking for an easy way to do it without having to go through the hard part. And I think this is something that progresses over time. Now, in my work, I say that this is fiat driven, but you show that this kind of dumbing down has been going on since before. Washington was a lot more advanced than Teddy Roosevelt 120 years later, and that was all on gold. So maybe there is something more to it than just the rise in time preference causing people to become more and more short-termist. And it's very fascinating to think about what it is. Yes, there's more public education, so it could be that. It could be the fiat money. But maybe we're just getting dumber as a species. Maybe we have been negatively selecting over the last couple of hundred years, where the dumber people are having more and more kids, and the dumber people are dominating, and we're just becoming dumber as a society.
I think that is possible. You've got, most people today, I think, like in the US, most native-born Americans tend to marry based on entertainment. You see a lot of foreigners, first-generation immigrants, and they will marry based on ability to provide, ability to be a father. They're sort of much more rational in how they choose, rather than choosing a guy because he plays in a band and he's got big biceps, and you're like, your life's going to be hard if you do that, to be honest. And in terms of the kid's IQ, that's probably going to be going backwards. I mean, in terms of what's driving it, it's interesting because you have some interaction from the culture. So, for example, again, if you look at immigrants, you have, say, Chinese immigrants who move to New York, and they'll live in poor neighborhoods because the houses are cheap. And so they'll go to these just horrific, dysfunctional schools. And guess what? They come out and they go to Princeton and they become dentists. And the reason, presumably, is because the family culture has been effectively imported from a functioning society, China, and so that is overwhelmed. Right, I suspect the parents probably encourage the kids not to socialize too much with their neighbors. They have a very sort of selected peer group, and so the culture can't overcome it, even when you have these horrific schools. But for I think native-born Americans, you have first of all, it's been sort of a gradual process where I think the culture has been decaying for several generations, and you also have fewer survival pressures. Like the parents are not so strict if the kids want to go out and become an artist. Right? I think if you are a Chinese kid in China and you announce that you're going to be like a ballet, like a male ballet dancer, I think you're in big trouble. Right? You're probably going to be signed out of the will. Your family's going to cut you off, and those are not so strong here because the survival pressures are not so big. And I think that's left an opportunity for the government to fill in and sort of capture those areas where these, if we look at curriculum decisions, for example, traditionally in the US, the way that public schools chose textbooks or chose curriculum, that had a lot of parent involvement in it. And so, we can sort of see both of those things happening at the same time, where on the one hand, the parents seem less interested. I imagine Chinese American parents may be quite a bit more interested, but native born parents tend to be less interested. And that has left this vacuum that education bureaucracies have then filled with transgender stuff that I suspect almost no parents actually requested. So, in a sense, Mencius Moldbug had an expression, the self-licking ice cream cone, that when the voters pull back and don't really care that much, the government sort of just runs its own thing. Like, who chose for the U.S. to join the Ukraine war? I mean, that were voters demanding it? Were they protesting at Grand Central Station demanding more wars? The system sort of has its own utility function. And of course, that's a problem because the entire premise of democracy, right, the reason why people respect democracy is because of the assumption that it's a transmission mechanism from voters to rulers. If instead, for whatever reason, the voters are being shut out or are just dropping out, maybe they're getting discouraged because it's too hard to change things, then it's no longer democracy, right? You just have this facade of democracy over top of a functionally sort of the deep state is running the country with very little input from voters, which I think probably describes where we are.
Yeah, I think that democracy might be the culprit. I'm no big fan of democracy myself. I think the democracy is the classic example of the idea that looks good on paper but then fails in implementation. So it's very deeply unpopular to say that you don't think that democracy is a good thing, but I don't, because I think what democracy does is that it legitimates government. And so it gives people the impression that if you just choose the right guy, then he can get into power and he'll do the right things. And that makes people think that government is a good thing. And I think that that is a very, very, very dangerous belief. And that's why democracy almost inevitably degenerates into tyranny, because it sells people the delusion that government is good for you, and then they stop thinking of government as the enemy and they start thinking of government as my mom and my dad and my friend and my provider and my patron and my lover, and it's out there to give me everything. And then they just want to give more money to the government, and then they give more power to the government, and then the government continues to have more and more, and you get one meaningless vote between two stooges every 4 years, and they get to control everything in your life and take half of your money, and in a sense formalizing the reality of government as being something that is there to benefit the government rather than the governed, understanding it that way, and then just having a very brutal expression of that reality in the form of a monarch, where I'm the king because my dad was the king, and my son is going to be the king because I am the king. And if you don't like it, you can cry harder. Just formalizing the reality of government as being that thing gives you a much healthier and much more accurate understanding of what government really is. And then also, because of the incentives being much better for the government to care for you in the long term. Because in democracy you get to vote them in and out, so that sounds like you're going to hold them to account, but in reality it means that they have 4 years in which they can do whatever they want, and then afterwards they can't do anything. Whereas a monarch expects to be in power for centuries, and so he wants you to be healthy and peaceful and prosperous, and your children to continue to remain healthy, peaceful, and prosperous for centuries, so that his children can continue to tax them. So brutal honesty is better than romantic fiction in my mind, and that's why I think, you could say that maybe democracy is a part of this problem. But you look at Britain, perhaps you could maybe say that the decline in these kind of things has probably happened to similar extent in Britain, but then that was also democratizing. So I'm not sure how we could test this very clearly. If we had examples of running this test over the last couple of 100 years to see how which countries have remained more coherent over time and which have degenerated to sixth graders.
To sixth grade discourse. Yeah, absolutely. You want the country to be owned or to be run like a family business. And of course, the family business is more valuable if people want to move there. And I think empirically, like if we look at sort of the more recent golden ages, aristocracies have done very well. So Britain, for example, was extremely successful when it was democratic, but it had a very, very limited franchise. So you had to be wealthy in order to vote. Of course, you had to be male. That's a separate question. Most societies have felt that women are unreliable voters. Clearly, they were wrong. At any rate, in Britain, you had to be rich to vote. And that seemed to work very well, right? You don't want a country, I think, that's run by 5 billionaires. But if you have a country that's run by 500 millionaires, or whatever, 100 millionaires, that seems to work quite well empirically. Because essentially, all they can agree on is leave me the heck alone. And, if we look through Britain, that was really, I think, the golden age of modern Britain. It started to go downhill because the left-wing Whigs kept pushing to extend the franchise. So, now anybody who owned a house could vote. Now anybody who rented could vote. Anybody who wasn't a vagrant could vote. And they just kept going further and further. And every single time they drove it further, it then got more and more socialist. So that seems to be a pretty strong effect. And, this sort of goes back to what we were talking at the top of the show there about roving bandit versus stationary bandit with Manker Olson. I think you're probably better able to explain that one.
Yeah, the basic idea there is that if you were a bandit and you were roving, and then you were moving around and just preyed on communities that you came across, you would go into a town. You say you and your roving bandits would go into a town and murder and rape and pillage, and then leave the town, and then never go back to that town ever again. And so in that period of a day or two or a week where you are in the town, you have absolutely no concern for the long-term well-being of the country or of the town. You don't care about what happens in a year. So if there's a valuable tree that yields a lot of fruit, that could yield fruit for tens of years, you chop it down for firewood for a day, because you're not going to benefit from the 10 years of fruit that it could yield, but you could use the firewood tonight. And so you have very high discounting of the future. And that leads to overconsumption and the destruction of capital in very simple terms, because you don't value things that matter for the future much. Now, if on the other hand, you decided to settle down in that town, you decided, you know what, I'm going to quit the wild roving bandit thing. I'm just going to settle down, find a nice town to bandit on the regular, and just make these people your farm, basically. Now, it sounds terrible, yeah, but it is it does mean that now you care about that tree and how that tree is going to function in 10 years. So you're less likely to cut the fruit bearing trees for firewood. You're less likely to consume capital today because you want these things to be operating 10 years down the line, because you're going to be eating from that fruit. You're going to be benefiting from that capital. And so that's essentially the distinction between monarchy and democracy. A democratic leader is only in power for 4 years, 5 years, 7 years, 8 years, something like that. And then they leave. So those few years are like the bandit coming into a community. As a president for those 4 years, you could do whatever you want. You can get your kids all kinds of amazing experiences, as we saw from the current president of the United States. I mean, really, who wouldn't want that for their son? All of these appointments at these incredibly important oil companies in Ukraine and all of these incredible extracurricular activities entailed. So you can only do that stuff for 4 years while you're in office. And so there are a lot of fruit bearing trees that could be cut down for wood fire, metaphorically. You could sacrifice the long-term interest of your taxpayers by committing yourself to a war with Russia for Ukraine because they gave your son $50,000 or so. Obviously, I'm oversimplifying, but that does exist. Democratic leaders are pretty much for sale, and they can be used to compromise their country. And it makes people it makes for very lucrative opportunities for these people for that very brief period of time, because they are not going to be there to bear the consequences a few years down the line, when the fruit trees are being missed because now we don't have any fruits because all of the presidents previously had been cutting down the metaphorical fruit trees for firewood. People are going to blame the current president at that time. They're not going to blame the president from 20 years ago, or even if some of them did. You still got the firewood, you still got the Ukrainian oil companies board appointments, and you still got all these weird pictures on your laptop. So you win. And so that, I think, is the logic of it. But it's an interesting question when you say the issue of limited suffrage, that maybe that is better. You could make the argument for it, but then you can see why it is also. You could also make the slippery slope argument that it starts off with just the lords can have a say, but then all right, we're going to have a House of Commons, but only the rich people can vote. But then soon enough, everybody can vote, and now you're importing foreigners to vote with the express mission of destroying the country. So that becomes a little bit more tricky. And I think if I were to say the example of Britain, I've been doing a lot of reading recently about World War One. And it's pretty remarkable at that point. By the end of the 19th century, the British Foreign Office had grown into this just horrific thing that was just out there doing awful, awful, awful things. They had an enormous amount of wealth because their country was industrialized. And they were just it's very sad because the wealth of Britain was built off of the backs of hardworking people and engineers and technicians and people who invented engines and made all kinds of amazing industrial innovations. And then you had these parasites sitting in the Foreign Office thinking that it was just some God-given gift to them because they are so much better than the rest of the world, and that they need to go out and murder large numbers of South Africans and Germans and people from all over the world, and Indians and so on, in order to enforce their vision of British Empire, which resulted in an enormous amount of bloodshed. And I'm not so sure that this kind of insanity would have been entirely possible in an absolute monarchy. I think it takes special kind of high time preference democratic evil to pull off this level of evil cunning and just wanton destruction, because I just think kings are likely to be more low time preference and more moral about the way that they behave, because they've been bred with the perspective of you want to think about what's best for generations down the line, whereas these commoners, they think that their current 10 years in office or 4 years in office or 5 years in office, this is the pinnacle of history. This is it. This is all that matters.
Yeah, and it's striking. I think that when people look at the British Empire or the British Golden Age, I just did it. I conflated it with the British Empire. People associate that with the empire, but I think the empire itself was actually negative. If you look at the jewel in the empire's crown was India, and that was gifted to Victoria. Okay, so the world's greatest empire was gifted. Why would you gift an empire? Well, easy, because you're losing money on it. The East India Company at that point was spending more in security. They couldn't actually really do security anymore because it was getting back to the British newspapers. And to keep order in India at that time, you had to do things that the public didn't like. So it was a money-losing proposition. They had the whole of Calcutta. They had all these terrible atrocities committed on both sides. And so they wanted out. And so they had this glorious ceremony where they handed it over to Queen Victoria. So note to future voters, if somebody gives you a country, don't take it, okay? Like you're not going to make money off it, all right? It's a trap. But I think that sort of highlights that, the early parts of the empire, as you say, that was built on invention and exporting these amazing things, building railroads in Argentina and such that had a huge ROI, return on investment, because Argentinian beef was cheap. And this early on, it was sort of pure, right? It was all very, very capitalistic. It was all very seeking a profit. And of course, pretty quickly, it got corrupted. Where they started infiltrating the government, the British government, using that to enforce debts. That was often how the British would sort of get their little fingers into a country in the first place. And now, not enforcing debts to the sort of universal British taxpayers, enforcing debts to specific rich guys, who made a phone call or whatever, sent a telegram and said, "Hey, I need a debt to be enforced." That was probably a debt that he had a really high interest rate on because it was lending to the Nawab of Bengal was probably, pretty risky. And then, he basically wanted the taxpayers to make money for him. So very quickly, the empire sort of deteriorated into this just very corrupt mechanism. And then, of course, after World War I, it just became an entire, a complete albatross. And the British government just basically jumped out. They barely defended any parts of it on the way out. But I think it's striking that for, if you go through our education system, you could be left with the impression that the British Empire is what made Britain great. I think the British Empire drained Britain, much like the American Empire, I think is currently draining America. I struggle to understand what a U.S. couple living in Oklahoma City, he's a fireman, she's a nurse. What exactly have they gotten from the American Empire? Except for death and tens of trillions of dollars. So it sort of reframes, I think, the colonial discussion, where I think maybe, going back quite a ways, colonialism, I think, is a losing proposition. It's essentially a corrupt toy of the elite, and that, $50,000 for Hunter Biden, you can basically hold that up as the iconic example of colonialism.
Yeah, I think that's a good example.
This podcast is brought to you by my friends at Coinbits, the oldest Bitcoin-only exchange. If you're listening to this podcast, you get that Bitcoin upends everything that government schools teach about money. Coinbits is the money app designed for people like you who understand Bitcoin and want to use it every day. Coinbits pioneered the concept of roundups, which converts your spare change into Bitcoin. Simply connect your debit and credit cards, and your usual purchases are rounded up to the nearest dollar, letting you save more in Bitcoin as you spend more. My favorite new Coinbits feature is Spending Insights, which gives you real-time feedback about how much of your money is chasing high-time preference, short-term gratification, and how much you are providing for your future with low-time preference choices. As always, Coinbits provides a terrific self-custody experience. Connect a hardware wallet for automatic withdrawals, so you keep counterparty risk to a minimum. Coinbits also offers peer-to-peer cash and Bitcoin payments, target orders, price alerts, and more. Coinbits can help you do almost anything you need with Bitcoin. Go to coinbits.app/Saifedean and get 3 months free. Again, that is coinbits.app/Saifedean, Saifedean. The Bitcoin Standard podcast is brought to you by Orange Pill app, the Bitcoin-only social network that connects you with high-signal Bitcoiners, events, and now merchants as well. If you're like me and can't stop talking about Bitcoin, you know how challenging it can be to talk to the no-coiners and how nice it is to talk to someone who gets you. With the Orange Pill app, you can find the Bitcoiners near you and they can replace the no-coiners in your life. You can organize events and meetups with local Bitcoiners, and wherever you travel, you can meet up with local Bitcoiners, all while being as anonymous as you like. So if you want to build your local network of Bitcoiners, find a Bitcoin meetup or merchants accepting Bitcoin, head over to orangepillapp.com to sign up or download the app from the App Store or Google Play Store and send me a DM so we can get connected.
All right. Well, I wanted to also get your opinion on what's going on in the macro world and in the fiat markets. I'm increasingly more and more of a spectator, and I enjoy just following this like people follow their baseball, just for water cooler talk, because being in Bitcoin means you don't have to pay any attention to that stuff. So for me, this was the last couple of weeks have been a fun occasion to do more victory laps, one of my favorite forms of exercise as a Bitcoiner, which is, remember, since Bitcoin came about, everybody kept saying, "Oh, Bitcoin is a low interest rate phenomena. It's a ZERP phenomena. It's only because we have zero interest rates and there's a lot of capital, so people are investing in silly things like Bitcoin. And as soon as interest rates begin to rise, Bitcoin is going to collapse. All the liquidity is going to go away. People are going to need to make rent, and all of the Bitcoin bros and all the tech bros, all of these bubbles, it's all going to shrink by 90% plus." And there's just not going to be any money to go into Bitcoin. So Bitcoin's going to go down and it will die. Well, here we are. The Fed has ended its cycle of hiking interest rates. So they started in March, and 2.5 years later, they look like they're going to start lowering rates again next month in September, which means that during this period of interest rate hikes, Bitcoin has gone up about 52%, from 42,000 to about $64,000, which is not bad for 2.5 years. 52% is pretty good, especially for something that was supposed to go to zero. So it should have had a negative 100% during that period. So we're beating the expectations of the experts by 150%, from negative 100 to plus 50. So I'm curious what you think of that, and what you think of the general macro picture. Are they going to really start lowering rates again? And then how's that going to affect things? Is it going to mean more inflation, or is it going to mean more recession, or is it going to mean both?
Yeah, so that's the big question. And I think the Fed is at an inflection point at the moment. First off, I mean, when it comes to Bitcoin, so one of the standard criticisms of Bitcoiners is that no matter what happens, we say Bitcoin fixes this. And as you say, right, Bitcoin goes up during rising rates, which they did because they created too much inflation. It goes up during falling rates. It goes up during bank crises. It goes up when Canadian truckers need to eat lunch. I mean, it's just like every crisis that comes along. For me, anyway, it's kind of shocking, right? So Bitcoin was created as an answer to bank bailouts, financial system collapse, and every single crisis that comes along, it turns out, by gum, Bitcoin does fix this. Uh, but in terms of where we are for the broader economy, the Fed has flagged now that they're going to start cutting. The Fed instinctively wants to cut, right? As you know, this is the purpose of a central bank. It is a money printer. It is a beautifully decorated, hidden, camouflaged money printer. So that's their sort of native instinct, is to try to print more. They do that because they think that it juices the economy, and then that gives you kind of a tissue fire, right? It burns bright, it burns fast. And then when it burns out, they, come up with scapegoats and, greedy grocery stores and such. So we're at that stage now where the Fed feels that inflation is low enough that it can start cutting rates. If you cut rates, it normally makes inflation go up. So it's a bit bold of them to be doing it at this stage, because inflation still is pretty high. It's around about 3%, which is quite a bit higher than their target. So there are a lot of sort of commentators, even left-wing guys, like Lawrence Summers, Larry Summers. He was Bill Clinton's Secretary of Treasury, I think. Anyway, even people like that are criticizing. They're saying you can't cut at 3%. That's way too high to cut. Historically, the Fed never would have done that. So Jerome Powell is sort of taking a bold move here. He's inviting more inflation because he's guessing that maybe the inflation is going to go away at this point. So, given that, one of the concerns is whether the Fed is sort of accepting now a higher target for inflation. Jerome keeps saying up and down that he's not. But if they do, like traditionally, the Fed is, or for 40 years or so, the Fed has targeted about 2% inflation. Are they cool with 3% now? Or are they going to just let that rip? If they do, then over a long enough time period, that then impoverishes people substantially generation by generation. So that's the first question. And then the second question is, why are they cutting at this point? So is there distress in the banking system? Is this just something he's trying to do to help Joe Biden or Kamala Harris? If they're trying to do that, the timing is probably pretty lousy. You might get a little boost in the stock markets, but traditionally rates take a much longer time to actually affect the economy. But anyway, there's a lot of sort of speculation as to why they're doing this. I think the most likely is because the jobs numbers keep crashing. So last week, the Bureau of Labor Statistics discovered that 818,000 jobs they thought existed are not real. There are other people who say that it may be a much higher number of jobs. There was a lot of fraud during COVID where there were what's called PPP loans, where you could apply for money for the government for your alleged business that was failing due to COVID. And a lot of those are fake, massive numbers. The government has been not very interested in pursuing those, probably because of the type of people who filed them. They anticipate that they're Democrats. And so a lot of those still remain on the books. And so that influences something called the birth-death model. It's possible that there are millions more jobs that are not actually there. And that sort of solved the puzzle for a lot of people, right? Because going on more than a year now, opinion polls, Americans have said that we're more or less in a depression, right? Jobs are scarce, incomes are crashing, I can't afford anything. Most Americans, there was a recent poll about a month or two ago that most Americans think the recession already started last year. And yet, if you look at the GDP numbers, jobs are relatively good. GDP growth is relatively good. Compared to historical numbers, these are all very strong. And so the media, of course, says that people are idiots. But the separate question then becomes, well, are they doing something funny with the numbers? For example, if you undercount inflation, then your GDP rate changes, right? If you're undercounting inflation by 1.5% a year, then you could make sluggish stagnation look like really strong GDP growth. Similar with jobs, if you have a lot of fake jobs running around in there, or on the other hand, if people have dropped out of the labor force, they're no longer working because they're on government benefits, which we know happened, then that plays with your unemployment rate. So that's there are a number of us, Jeff Tucker, my colleagues, EJ Antoni and Richard Stern. A number of us are trying to look at these and figure out what is the truth here. Are voters correct that things are really dire and maybe we're already in recession, or are the government numbers accurate? And so if those two together, it is possible that you've got the Fed who's basically saying let inflation rip, and you've got an economy that could potentially already be in recession. For that, we have a word which is stagflation, which we haven't seen since the 1970s. That was catastrophic last time around. The president at the time lost his job. And that I think people of your and my age thought that we never would see that again. Maybe you might have had less faith in our economic overlords, but I didn't think we would ever see the 1970s catastrophe again. But I think it's possible that
I think there's probably a good case to be made that it is possible because I mean, as you say, the fiscal situation is extremely unsustainable, and there's no way out of it except through devaluation or default or both. And when you combine that with very high private sector debt, then you can see how raising interest rates, defaults, all of that can lead to all kinds of complications. It's really difficult to be able to tell how this thing's going to work. I think I mean, a lot of people have very strong opinions about where things are going and what you should do with your portfolio. A lot of people get online and start shouting or go on TV and talk very aggressively about the Fed should do this and the Fed should do that, and you should do this with your portfolio and you shouldn't do that. And there's a lot of think buoying going on out there. People think that they're ahead of the curve and they're going to know what to do, but it's really, 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 really difficult to beat index funds. It's just all of the active management, all of the following the trading, all of the trying to figure out what Jerome Powell had for breakfast and how he's going to feel, and trying to figure out how things are going with his wife in order to try and get the uh, edge of where you think this is going to go. But realistically, the vast majority of investors can't even beat index funds, let alone beating Bitcoin. So my advice is always to tell people to just think about the opportunity cost of following all of this stuff and the time it takes and how exhausting it can be. And I think it's a pretty counterproductive and unhealthy thing to be wasting a lot of your time trying to get on top of this. It's good to just have a way of stepping out and not having to worry about it, which is what Bitcoin does.
So I'm curious for you. So given the fiscal situation, and I agree with you, that is the elephant in the room. Nothing is stopping the spending. I don't think Trump's going to substantially reduce. He might bring it down from what Biden's been doing, but he's not going to substantially change, I think, the trajectory on the debt. What do you think in terms of, are we nearing the fiat collapse? Are they just going to become more rabid and seize more resources, and we're going to continue to stagnate more and more? Where do you think it goes from here? Right? Does it peter out, or does it end with a bang?
I don't know. It's a difficult question to answer because there's been a good case to be made that we are close to the fiat collapse. I'd say pretty much every point over the last 53 years, since 1971. And in 1972, it looked like we're close to it because the prices of everything was going up. And same was true in 1973, 4, 5, 6, up until 1980. I guess the early 80s was the best time or the worst time for the doomerism, the idea that fiat's going to collapse. The early 80s were the best. Then in the 90s, things were also good, but inflation had begun to pick up. And then in the 2000s, after 2008, that was when a lot of people started to think, all right, this is going to be the end. But here we are. It's 16 years later. 16 years is not nothing. That's a lot of time. And the thing is still going on. It defies belief. And at a certain point, you want to think that, all right, well, this is just going to go on forever. And I think you need to at least kick that idea around in your head and trying to think about how it would go on forever and what would be the reasons why it could go on forever. But really, over the last year, we've reached a very, very significant tipping point wherein the interest on the debt is larger than the defense spending. And as I'm sure you know, the defense spending is an enormous amount of money. I've seen you mention in one of your videos just how expensive all of this insane U.S. military stuff is. I mean, it's just insane. $1 million machinery gets taken out by $10,000 drones, and it's all becoming obsolete. It's all really a government boondoggle to get more money in the hands of more and more corrupt people. So it's a lot of money. There's a lot of money that's going on spending for defense, and yet you're paying more than that on interest, and you're already in a lot of debt. So this is Hyman Minsky used to talk about 3 stages of speculative finance. There's he called it hedge, and I forget what was the second one's the term that he used exactly, and then the third term is Ponzi, and Ponzi is when you're borrowing to pay the interest on your debt. Once you've got to that point, then effectively you're at a Ponzi. You're paying the old investors from the new investors. And that's essentially where the government is right now, where the US government is right now. Now, granted, we've never been here before, but they have managed to pull rabbits out of their hats before. So it's tempting to start penning the obituaries, but Fiat's been around longer than Bitcoin, and it's been written off a lot more than Bitcoin. We Bitcoiners like to take pride in all the people writing off Bitcoin, but people have been writing off Fiat a lot more. So you might be tempted to say that the end is near, but who knows? I think there is, if I were to make a case for how this can continue, I mean, I think some combination of default and devaluation might keep the show going for another decade or two, perhaps, without there being a catastrophic collapse. Because ultimately, I still think there is this massive advantage wherein this is the only payment network that functions internationally, the US dollar, SWIFT network, and the Federal Reserve. And so even as it gets devalued, it's still infinitely better than all the fiat alternatives. BRICS aren't going to get together and set up an alternative to the dollar. So there, when Brazil or Argentina or Bolivia has a crappy monetary policy, people go to the dollar. But when the dollar has a crappy monetary policy, people have nowhere to go to. Of course, they do. They have Bitcoin, but that requires people to shut up and sit and listen and read and understand Bitcoin. And that's just not something that most people have time for these days. And I think we might be some way away from getting to this mass adoption stage with Bitcoin. So maybe this keeps the dollar Ponzi going for a few more years or decades. I don't know. What do you think?
Yeah, there's like an intellectual ring fence around Bitcoin that people who should be buying it don't buy. So, yeah, first off, I completely agree that on the road to fiat collapse, the US dollar absolutely gets stronger. I think it's a supernova, isn't it? That gets like super bright right before it dies. And so, like a supernova theory of dollar, that as things start to look dire, the the dollar becomes more and more this safe haven, and the yen, the peso, the dinars, all these currencies collapse one by one, and then a lot of that demand folds into the U.S. dollar. And so it's even theoretically possible the U.S. dollar gets stronger on the way out. But so for me, there's kind of two recent moments that I think are interesting. One of them is Paul Volcker in the 1970s. So he's the one who ended the 1970s inflation. And what's interesting there is that he was one single person. In other words, it's not like the system had an immune system that sort of triggered in to, correct the inflation. It was one dude, and he was unexpected, right? Jimmy Carter was a inflationist president, and he brought this guy in who turned out to be the hardest money chair the Fed had ever had. I don't think anybody expected that. But moreover, my concern is that everybody associated with Paul Volcker lost their job except for him. He is a hero for what he did. Jimmy Carter got kicked out. All of them, all the inflationists got kicked out. And so my concern is that Washington is dumb, but it's not that dumb. It's not going to do that again, right? It's not going to take one for the team, right? Because what Volcker effectively did is that he ramped rates up so high that it killed inflation, but it also caused this brutal series of recessions, which is why Jimmy Carter lost his job. The inflation, yes, but also I think the recessions were starting by then. Well, at any rate, raising up the interest rates added to the misery from the inflation. So next time around, my concern is that if we do fall into the 1970s trap again, which I think we're at least at the edge of that, if we fall into it, then I can't imagine that Washington would intentionally put out another Volcker to take one for the team. Because keep in mind, Jimmy Carter didn't do it either. He didn't intentionally choose a hard money guy. He thought he was going to play ball. So that's one. And then the second one that I think is interesting is what happened in Greece in 2011-12, right? So that was the European debt crisis. And at that time, so Greece threatened to default on its debts, and that set off a chain reaction that it was, I guess, the biggest financial crisis in Europe, aside from 2008 since the Depression. And what was interesting there was that when Greece was flirting with default, they were paying out a lower percent of GDP in debt interest than the US was paying at that time. In other words, they did not have to default. Rather, what happened is they had a candidate who figured that he could get votes by trashing on German bankers. And yes, you can always get votes in Greece trashing German bankers. And in America, you can always get votes trashing Chinese bankers, or Wall Street for that matter. And so my concern is that a lot of the discussion in the US revolves around the question of, can we pay our debts? It has nothing to do with can. Right. What happens is, as the debt gets bigger, as I think it's above 1 trillion now in debt interest. I think it's online for like 1.7 trillion in the next year or two. As that number gets bigger and bigger, at some point, political candidates, you're going to get free money. I mean, if Donald Trump got up there and suggested that we stiff the Chinese, you think he's going to lose votes over that? And then people will say, well, sure, but who would lend to the US? Well, there have been many other countries that have defaulted, and they turn right back around the following Tuesday and they get brand new loans. Bankers are soulless. They do the calculations. If not, they will step over the corpses of other bankers to come and make a loan to you. So that's my concern, is that when you put those two together, if we fall into the hole, can we count on another Volcker? As point one. Point two, in terms of the political calculations, are we much, much closer to even a hard default than we imagine?
Yeah, I think there's a case to be made there. I think at some level you've got to come to terms with the fact that clearly there are people putting things in the teleprompter behind Joe Biden. And I think it's interesting that there was no power struggle that anybody could detect for who was going to put things into Joe Biden's teleprompter. So it's clear that the teleprompter came pre-installed, that we've had teleprompters for a while. This is part of the job. I don't think that there's just that much importance to the decisions that are being taken by these figurehead politicians. I think the deeper interests are the ones that manage things. And so you can be a little you can perhaps get too carried away by listening to the rhetoric of politicians, particularly in elections. So somebody like Kamala is going on about capital gains tax on unrealized gains, and all kinds of crazy leftist ideas. It's not clear to me that these are necessarily going to translate into policy in reality. And as you said, Carter was the one who brought in Volcker. So maybe there will be something like this. And it doesn't matter if it's a Democrat or a Republican, but there comes a point at which somebody, some adult in charge says, all right, we need to take the punch away from this party. Everybody's had enough to drink. We've had a nice few decades of fiat excess, but we need to get in shape and sober up a bit and work hard. Maybe it's difficult to see it, but I mean, look, it was very difficult to see what happened with COVID, with all of the lockdowns and the insane mandates and masks and all of that stuff. And yet it happened, and all the travel restrictions and everything around the world. When there's a crisis, people just are very malleable. People are very open to all kinds of new things. So maybe something like this can happen.
Yeah, and the question is, so if we just call that the deep state, we sort of posit that there's some group of individuals who are motivated and have the resources that they can kind of put brakes on it if it gets too far out of hand. And at that point, the concern becomes, how much are these people willing to put up with? So, in 1930s Germany, for example, it remains a question. Like, there were all sorts of power bases and deep states in German society at the time. Why didn't they stop him? Right. And people at the time talked about how they kept waiting for the German deep state to jump in and get rid of this clown. And everybody was waiting for the other guy to do it, and nobody did it. By the time, it's like we were talking earlier, like, what time do you leave? At what point does the deep state intervene and, direct everybody off of crazy path? And empirically, if we look at Germany anyway, they don't necessarily do it in time. You have a common pool problem, right? Everybody's waiting for the other guy to do it because they are busy sucking at the, public trough, or eating at the public trough. So, they don't want to stick their neck out. They're going to let somebody else do it. And so that then becomes the question. I agree with you. What's striking is that we just had effectively a coup. We had a bloodless coup in the U.S. where the democratically elected by the Democratic primary voters, the democratically elected presidential candidate was removed. Like he was just forced out, I guess, by George Clooney in the New York Times. And number one, nobody seems disturbed by this. But secondly, like who is running it? Like who's in charge? And I mean, it's kind of scary. It's scary as an American, but it should be scary, I think, to anybody on Earth, to the extent that the U.S. has so much ability to cause problems for everybody else. You have a loose nuke at this point. Like, who the heck is running this thing? And so, it's sort of disturbing to me that point one, that we ask, will the deep state intervene in time if things go crazy? But point two, nobody even knows who the deep state is. We're barely allowed to talk about it. Whitney Webb, I guess, takes a stab, but even she said she doesn't know exactly who these are. Maybe we can track it by the money. So if you look at grants, for example, that come out of the U.S., even there, you got a lot of tricky stuff. Like you've got little mechanisms where activists sue the government and then the government settles and hands them $1 billion. I mean, you got all kinds of cute ways that people pull money out of the government. So I guess you could follow the money to try to figure out who's in charge. But it is very disturbing that the most dangerous potential regime on earth, potential or actual, and nobody actually has any idea who's running it.
Yeah, I've said this a long time ago. It's the most fascinating thing for me about U.S. politics over the last 4 years. It's very clear that the president is senile, and nobody mentions the idea that clearly somebody's putting things in his teleprompter. And what is the thought process? What is the political process? What is the power struggle taking place there? I mean, who sits there and writes those things, and who do they talk to? Just, is there some kind of election that goes on about what is it that we're going to put into this guy's teleprompter now? No, I think the seamless transition in which they just lost his mental capacities while the teleprompters just continued to churn out the same platitudes is really very interesting. On the one hand, it enforces your cynicism, but I guess on some level, it can be a little bit more reassuring, knowing that it doesn't matter if it's Biden or Obama or Trump or Kamala, that it's really, it's a lot like World Wrestling Federation, where they're pretending to punch each other, but really it's just a show. And the important thing is that everybody's making money.
Yeah, and Tucker Carlson has talked a lot about that. That's been one of his main themes, is the idea that politics in the U.S., like most countries, runs on right versus left, or blue versus green in Roman terms. But he's argued that really this is sort of the elite throwing an apple in there and making everybody fight over it, while the elite just keeps running things. And in a sense, that's comforting. Well, no, I would have said that's comforting before COVID. Right. So what freaked me out was sort of shook my faith, right? Because previously I would have said, it won't get that bad. They'll talk about communism, but Wall Street's not going to let that happen. COVID freaked me out because whatever this power base is, they apparently are cool with things that we previously would not have accepted as a society. I mean, forcing children to do experimental vaccines, pretty 1930s theme wise. And they were absolutely fine with that. So I think COVID made me a little concerned, and I think that you're surely familiar with this concept, but in World War I, we had a sort of totalitarian clique that took over the U.S. government. You had to apply to the government if you wanted to make a new kind of shovel. They had to make sure that there wasn't excess competition. It was a Soviet system in World War I. And after the war, they returned to normalcy. They reversed a lot of it. But the problem is that the guys who ran that totalitarian government in World War I, they spent the rest of their careers like addicts, just looking for that high, right? That total power high. And what concerns me in COVID is that, number one, the elite failed to stop what were totalitarian. Like, you could not go to church. That has not happened since 1648. Okay, that was way out there. But on top of that, now we have this cadre of 1 million bureaucrats who have tasted human blood, and they'll be back. And so, the World War I gang, They won. They took a stock market crash in 1929. These had happened many, many, many times in history. They bounced right off. Bunch of guys jump out windows, all good. And they turned that into, they took it back over again. That was the New Deal. That then led to World War II. So my concern is that we are living in a very, very dangerous time now where the elite has proven themselves okay with existential totalitarianism. And we have just got done training an army of people who are going to try to install it again.
Yeah, I think that is pretty astute, and I think to go back on World War One and the Great Depression, arguably they didn't really leave; they just continued to consolidate power after World War One. And I think the important thing here is the 1929 crash. If you've read Rothbard's America's Great Depression, probably my favorite Rothbard book. In it, he shows the cause of the stock market crash, and the cause of the depression was all of the inflation of the 1920s, because they went off the gold standard in World War One all over the world, including the U.S. The U.S. went back on the gold standard, but then Britain was not able to go back on the gold standard because they didn't want to devalue the pound, and so they exported their inflation to the U.S. They convinced the U.S. central bank to engage in inflation so that British people would stop selling their gold to the US. If the US butchered its currency, then the British would stop losing their gold. And then that led to the Great Depression, and then that led to the New Deal. So once you get into the cycle of interventionism, it's just once you snap into the mode of thinking that if it's a problem, then the government can fix it, then you're stuck in this purgatory forever where problem happens, you give more power and money to the government to fix it. That creates a bigger problem. You give more money and power to the government to fix it, which creates a bigger problem. And you can see that from World War One to the Great Depression to World War II, and the growth of the state since then. It's just always been the same thing, and it just keeps getting worse and worse.
Well, and the incentives are very concerning, right? So that's Bob Higgs, Crisis and Leviathan. He wrote a book about this phenomenon where every time there's a crisis, the government ratchets up and then it might get half of it back, but it stays permanently bigger. So every single time it ratchets up. And of course, that creates a perverse incentive where we all sort of assume that our governments are trying to protect us from crises, but it is extraordinarily profitable, especially once you bring in not just $50,000 deals for Hunter Biden, but $650,000 speaking gigs for Janet Yellen, and I mean, you just across the entire economy, billions of dollars for green energy, boondock. Once you consider all of the corruption, it's not just profitable in terms of growing the government and increasing the budget of your department. It's actually profitable in terms of you will be a tens of millionaire when you retire from whatever the government agency is. And so the concern at that point, I think, is that the government is no longer trying to prevent crises. And, if you look at our behavior in Ukraine, for example, where, I mean, it's almost like we're trying to pick a fight. Why would the average American care who runs Donbass? I don't think any of us knew what Donbass was before the war started. It's not our problem. Both countries are relatively authoritarian. They're both pretty badly run in the grand scheme. Not our problem. And yet here we are trying to pick a World War III. And so you might ask, what happened to this notion that government is supposed to protect us, right? It's supposed to prevent crises. Instead, it looks like the government is trying to create them. And if you look at the incentives, it makes sense. COVID, they made out like bandits from COVID. That was the best thing ever. It was actually wonderful for rich people in general because of how much money was created. But specifically for anybody involved in government, anybody who gets the contracts for them, it was extraordinarily profitable. And unfortunately, there's a lot of different crises you can come up with. You can come up with migration crises, diseases, AI. It's like this wonderful menu that they have to choose from. And each one of those has $1 trillion profit tied to it for them.
Yep, this is the thing. The vast majority of people believe that government should do things when there is a crisis. And as long as that's the case, which is what schools and universities teach, you're going to spend your life hyperventilating from one crisis to the next. And that's what happens on TV. There's always something that's scaring you, and it's getting you emotionally worked up. And you'll notice that the object of your emotional hysteria is always something that can be resolved by resorting to the magic money printer. Doesn't matter what the problem is, printing money fixes it. The weather is being ruined. How do we fix the weather? Central banks print money. Oh no, Slavs in the east of Europe are fighting with one another. How do you fix that? Print a bunch of money. Middle
Yep.
Easterners are fighting with one another. How do you fix that? Print a bunch of money. When all you got is a money printer, everything can be fixed by printing money. That's just basic fiat science, unfortunately.
Which brings us back to one of the core arguments for Bitcoin is that, governments cannot resist inflating. It's all they got. They screw everything else up. Our entire lifetimes, every time they screw something up, they launch a bazooka of trillions of dollars at it, and they just keep doing it over and over until it goes away, and then they do it again. So the inflation is guaranteed. The incentives are built into the system.
Yep, absolutely. All right. Well, Peter, we could keep going on for hours, but I'm going to have mercy on your schedule for the day and let you do other things with your life. Tell us more about where you are online and where people can find you and what you're up to these days.
Okay, I post daily videos on X. Thank you to Elon for protecting free speech when my government would not. At any rate, I post those every morning, 3.5-minute videos talking about economics and freedom. I also write over on Substack as Prof St Onge, and I do YouTube and occasional interviews. Hopefully, I can have Saifedean on one of these days.
Yeah, sure. I'd be happy to. I owe you one now. Well, I owe you two because I've had you on before. So you could have me on twice.
Awesome.
Peter, thank you so much for joining us. It was always fun chatting with you.
Always a pleasure.
Cheers, man. Take care. Bye-bye.